Imagine this. A company reports what looked like, well, blockbuster earnings. A massive swing into profit, just crushing Wall Street expectations. Your first thought might be, wow, what a quarter, right? But here's the paradox we often see. Is that headline profit really what it seems? Is it genuinely reflecting a thriving core business? Or is there maybe something else driving those impressive numbers? Today, we're doing a deep dive into KULR Technology Group's Q2 2025 earnings report, and we're exploring a company that seems to be living this kind of fascinating double life. On one hand, you got this truly innovative, deep tech business. I mean, stuff that's literally proven by NASA. Incredible. And on the other hand, they made this really aggressive pivot, now calling themselves a Bitcoin-first company. It's quite a mix.
Yeah, what's really fascinating here is exactly that dichotomy. It's not just about the raw numbers you see on the page. It's about the intricate story they tell, and maybe more importantly, the implications of that story for you. Whether you're just curious, maybe a potential investor, or just someone trying to figure out what really drives a company's financials in today's pretty complex market. So our mission here is to take this source material, this whole stack of earnings analysis, and pull out the most important nuggets, the key insights, to unmask the real drivers behind KLR's unusual quarter.
Okay, so let's start with those headlines, because honestly, on the surface, KLR's second quarter of 2025 looked incredibly strong, just spectacular. They reported total revenue of $3.97 million. That's a huge 63.4% increase from Q2 2024.
Huh.
That comfortably beat Wall Street's estimate. So far, so good.
Right, solid top-line growth there.
But the real stunner was their net income, $8.14 million. That's a massive reversal from a net loss of nearly $6 million just last year.
A huge swing.
Exactly. And this translated into a diluted earnings per share, or EPS, of 22 cents. Now, this figure just blew past the analyst consensus. They were actually expecting a loss of 12 themselves per share.
Wow. So not just a beat, but a demolition of expectations on the bottom line.
Yeah, it was even called one of the most significant beats of the whole quarter. And for me, that huge outperformance on the diluted EPS compared to the revenue growth, that immediately screamed, wait a second, how did they actually do that?
That is the critical question, isn't it? That immense EPS figure, especially when, spoiler alert, the core business itself was still losing money. It makes you ask, okay, what exactly is driving such a huge swing? It certainly seems almost too good to be true, right? And the answer isn't that they suddenly started selling a lot more of their core tech products or became super efficient overnight.
Okay, so if that headline EPS number isn't really coming from their tech operations, what is driving it? What's behind such a disproportionately high earnings per share compared to their actual revenue growth?
Well, it really boils down to a combination of two key factors that essentially reshape the reported numbers. It's quite clever, in a way. First, and this is crucial, the company's own press release clearly states that the net income was primarily driven by a mark-to-market of the company's Bitcoin holdings.
Mark-to-market, so
Yes.
not actual cash profit.
Exactly. It's a non-cash accounting gain. Think of it like this. If you own a house and its value goes up on Zillow, great. On paper, you look richer. But you haven't sold the house, so there's no actual cash in your pocket from that gain. And there's new FASB guidance, ASU 2023-08, that now requires companies to carry crypto assets like Bitcoin at fair value. They have to recognize these unrealized changes in their net income each reporting period. So this accounting rule alone can significantly impact reported earnings without any actual operational change in the business.
Okay, so a big paper gain from Bitcoin is a major piece of the puzzle. But were there any other significant structural changes, things that helped boost that specific EPS figure?
Yes, absolutely. There was a second major factor happening around the same time. KLR completed a 1-for-8 reverse stock split back in June.
A reverse split?
Yeah, and what that does is it dramatically cuts down the number of shares outstanding. They went from around 300 million shares to only about 40 million.
Ah, okay, I see where this is going. So that spectacular $1.22 EPS number is essentially just a formula.
Yeah.
You take that large unrealized gain from Bitcoin,
Right.
and you divide it by a much, much smaller number of shares because of the reverse split.
You got it. It mechanically creates this really high positive EPS number. But, like you said, it sounds fundamentally disconnected from the actual health, the underlying health of the company's core technology business.
So it's financial engineering, really, not operational success driving that specific number.
Precisely. That's the perfect way to put it. It's financial engineering. And to really get a handle on KULR's financial health this quarter, you almost have to look at it like two separate sets of books, one for their established core tech operations, the NASA-approved stuff, and a completely different ledger for this new Bitcoin treasury strategy they've adopted. They're running in parallel.
Okay, let's tackle the traditional side first then, their core tech business.
Mhm.
What's the real story there underneath that impressive revenue growth figure?
Well, it's actually a story of what we'd call unprofitable growth. Despite that big 63.4% jump in revenue, which looks great,
Yep.
KULR's actual ability to turn that revenue into profit from its main business actually got worse this quarter.
Worse, how so?
Their gross margin fell pretty significantly. It went down from 24% last year to just 18% this quarter. And the company itself said this was because of unanticipated labor hours needed to complete technical projects. That suggests some real challenges in cost control or maybe project execution, particularly on the services side of things.
Okay, so margin squeezed. What about costs?
Operating expenses shot up across the board. Selling, general, and administrative costs, SG&A, they rose over 51% to almost $7 million. That's more spending on advertising, marketing, stock-based compensation, the usual suspects, and R&D spending surged even more, up a whopping 86% to $2.44 million, mostly due to planned consulting services, they said.
So revenue's up, but margins down and costs way up. What was the net effect on the operational bottom line?
The result was that their loss from operations actually widened by a huge 77.3%. It went from about $5.3 million last year to negative $9.45 million this quarter.
Wow.
Yeah, this shows significant negative operating leverage. Basically, for every new dollar of revenue they brought in, their total costs went up by more than $1. And that's just, well, it's not sustainable in the long run for a core business model.
Wow. Okay, that paints a very, very different picture of the core business, doesn't it?
Yeah.
A significant operational cash burn hiding behind that strong revenue growth number. It really emphasizes why that net income figure couldn't possibly have come from the actual operations.
Exactly right.
So let's shift gears. Let's talk about the other side of the story. The real source of that reported profit, this Bitcoin Treasury ledger.
Exactly. The heart of their reported profit this quarter, without a doubt, lies in that Bitcoin Treasury ledger, that $8.14 million net income, generated entirely by the company's Bitcoin holdings, not by selling their cool tech.
And just to reiterate, that's the mark-to-market gain we talked about.
Correct. It's unrealized, a non-cash paper gain, just reflecting that Bitcoin's price went up during the quarter. And what's also notable, I think, is that KULR did not report a non-GAAP or adjusted earnings figure that would exclude this Bitcoin gain.
Which they could have done.
They could have, and many companies do, to show underlying performance. If they had, it definitely would have shown their significant operational loss, and honestly, that would have been much more representative of how the core business actually performed, its ongoing cash-burning reality. So this Bitcoin Treasury ledger isn't just some side note. It's clearly the engine of their reported profit and really the centerpiece of their new strategic direction.
So how are they framing Bitcoin strategically? Why this really aggressive pivot into crypto? What's the thinking?
Well, KULR publicly states that they regard Bitcoin as a, quote, dependable store of value and a compelling investment opportunity. They're even calling it digital gold. They seem to view its decentralized design and strong security protocols as more resilient than, say, traditional assets or even physical gold.
And this isn't just dipping a toe in the water.
Oh, no, not at all. This isn't just dabbling. They've gone all in. They've committed up to 90% of their surplus cash reserves to purchase and hold Bitcoin. And their holdings grew significantly. They went from around 217 Bitcoin, worth about $20 million at the end of 2024, to over 1,000 Bitcoin, valued at $101 million by July 2025. They currently hold 1,021 BTC and are actually boasting about a BTC yield of 291.2% year-to-date, which, reflects Bitcoin's price run-up.
And they're not just buying it on exchanges, they've also adopted this buyer mine strategy, right? Tell us about the mining part.
That's right. They've gone beyond just purchasing Bitcoin. They successfully deployed 3,570, to be exact, of these powerful Bitmain mining machines. They set them up in Asuncion, Paraguay, significantly boosting their total Bitcoin mining capacity. They're aiming for over 1 exahash per second by late summer, which is a lot of computing power.
And Paraguay. Why there?
Paraguay was chosen specifically for its abundant, low-cost hydroelectric power, primarily from the massive Itaipu Dam. Power cost is the single biggest factor in Bitcoin mining profitability, so cheap hydro is a huge draw.
Okay, so they're mining.
Yeah.
How are they funding all this, especially when the core business is losing money?
Good question. They're using a couple of financial tools. First, they secured a $20 million Bitcoin-backed credit facility from Coinbase Credit. So they're borrowing money using their existing Bitcoin holdings as collateral.
Okay, borrowing against Bitcoin. That sounds risky.
It absolutely is. It provides capital, yes, but it introduces a significant risk of margin calls if Bitcoin's price drops substantially. They could be forced to sell Bitcoin at the worst possible time. And second, they also entered into a massive $300 million ATM equity offering.
ATM.
Yeah, at the market. It basically means they can continuously issue new shares into the open market whenever they want, up to that $300 million limit.
So constantly diluting existing shareholders.
Potentially, yes. To fund this Bitcoin reserve strategy and likely cover operational cash burn, too.
So summing that up, they're borrowing against a highly volatile asset, Bitcoin, and continuously issuing new shares, which dilutes existing shareholders,
Yeah.
all to fund a core business that's currently losing money operationally and to buy even more Bitcoin.
That's the essence of it.
Wow. It's definitely a bold strategy, unconventional to say the least. Now, despite all these financial shifts and this aggressive Bitcoin strategy, let's not forget KULR still had that truly remarkable core business. What exactly are the innovations and technologies they're bringing to market, the stuff that gets NASA interested?
Yeah, it's important to remember that. KLR's core business is genuinely impressive. It's focused on high-performance thermal management technologies and energy systems, really cutting-edge stuff. And they highlighted several tangible achievements this quarter. In commercial space, they shipped their K1 S500 XLT battery platform that's a lightweight system specifically for the private space industry. In robotics, they released the 7th generation XLA exoskeleton, which they developed with German Bionic, and they're introducing it now in North America. For defense, they successfully demonstrated a ballistic-proof battery for the Department of Defense. Very tough requirements there. And in the maritime sector, they finished delivering a specialized battery that can handle extreme pressure underwater to a key strategic partner. So real products, real applications.
And they have that unique carbon fiber tech, right?
Yeah, their proprietary carbon fiber technology offers superior thermal conductivity, but in a really lightweight form factor. That's a huge deal for any application where weight and managing heat are critical. Think aerospace, EVs, electronics.
And that NASA connection we mentioned earlier, that's not just hype.
Not at all. They have what seems like an unparalleled technical moat because of that unique NASA relationship. That includes an exclusive license for certain battery safety tech. And they're apparently the only commercial company with a specific NASA certification, JSC 2793D, needed for human spaceflight hardware. That's a massive validation.
Okay, so let's put this together. On one hand, you have this small microcap company, right? Market cap, around $266 million, maybe 50-something employees.
Tiny, relatively speaking.
Yeah, but developing this cutting-edge tech for absolute Tier 1 clients like NASA, the DoD, Lockheed Martin, world-class stuff.
Yeah.
Yet, on the other hand, their annual revenues are only around $13 million, trailing 12 months. That seems like a huge disconnect. Why the struggle to really scale and commercialize this amazing tech?
You've really hit on the crucial point there. It's what we might call the commercialization gap. You have this world-class, space-proven technology validated by the toughest customers you can imagine, yet their revenues are still relatively modest for that kind of capability. It's a common challenge for deep tech companies, frankly. It often comes down to things like incredibly long sales cycles, especially with government or large enterprise clients, the high costs of scaling up manufacturing for such specialized products, or maybe just a limited, immediate, adjustable market for these highly technical, often custom solutions.
And you think this gap might be why they pivoted so hard into Netcoin?
It seems very plausible. This gap, this difficulty in rapidly scaling the core tech revenue could be a big driver behind the Bitcoin pivot. Maybe they see it as a way to potentially fund operations and future expansion without relying solely on that slower, more traditional, and perhaps difficult growth path of the core business. A financial bridge, perhaps. And remember, KULR isn't just making a Bitcoin bet. They are also undertaking these major actions to completely reshape their financial structure and how their stock is perceived by the market. It's a multi-pronged approach.
Right, you mentioned the reverse stock split earlier. Let's revisit that.
Yeah.
What was the core rationale behind that specific move? Why do companies do that?
Well, the official line was to optimize market dynamics and broaden investor appeal. Which sounds nice, but practically speaking, it was almost certainly done primarily to get the share price comfortably above the minimum listing requirements for their exchange, the NYSE American. That's often around $5 a share. Below that, you risk delisting. And secondarily, it also makes the stock look more appealing, more substantial to big institutional funds. Many of them have internal rules against buying penny stocks, stocks trading below $5 or even $10.
Okay, makes sense. And they also managed to get included in the Russell 3000 index around the same time. What does that actually do for a company like KULR?
Getting into a major index like the Russell 3000, especially effective June 30th, is actually a pretty big deal for a company of KULR's size. It massively increases their visibility. Suddenly, way more investors and analysts are aware of them, but more importantly, it creates automatic buying demand.
How so?
Well, index funds and ETFs that track the Russell 3000 now have to buy KULR shares to match the index composition. It provides this sort of built-in floor of demand for the stock, regardless of the company's day-to-day news.
It really does all start to fit together, doesn't it? The reverse split, the index inclusion, it feels like a coordinated package to change how the stock trades and maybe who owns it, attracting a different type of investor, perhaps.
Exactly. It looks like a deliberate strategy to reshape their market profile alongside the Bitcoin pivot.
But this audacious strategy, while clearly aiming for significant upside, it obviously introduces substantial risks. You touched on the margin call risk. What are the biggest ones you see overall?
Absolutely. The risks are significant. First, as we discussed, is that direct exposure through the $20 million Coinbase credit facility. It's secured, collateralized by their Bitcoin. If Bitcoin's price tanks significantly, they could face a margin call. That could force them to sell Bitcoin at a huge loss, likely during a market crash when they least want to. It's a really high-stakes gamble, tying their financial health directly to crypto volatility.
Okay, crypto volatility is number one. What else?
Beyond that immediate risk, there's the fundamental financial instability and cash burn. KULR has a consistent history of losses. We're talking a net loss of $17.5 million in 2024, almost $19 million just in Q1 2025 before this Bitcoin gain kicked in. They've had negative free cash flow for the last 5 years straight. They consumed over $24 million in cash on a trailing 12-month basis. Their core operations just consume way more cash than they bring in.
So they constantly need external financing, hence the ATM offering.
Precisely. They are constantly reliant on external financing just to keep the lights on and fund that core R&D, let alone buy Bitcoin.
So with all that in mind, the operational losses, the reliance on Bitcoin gains, the high risks, how do you even begin to value a company like this? It feels like it has such a split identity.
That's the million-dollar question, isn't it? And it makes traditional valuation metrics almost useless, frankly. For example, the price-to-earnings ratio, PE. Meaningless. They have consistent losses, so there's no E. Okay, look at price-to-sales PS ratio. KULR's is exceptionally high. It's somewhere between 16 to 24 times sales.
Wow, 16 to 24 times sales. How does that compare?
That is a huge premium. Industry averages are typically around 2 to 3 times sales. Even their direct peers might be around 2 times sales. So 16 to 24. That just screams speculation more than fundamental value.
So fundamental metrics are difficult. What about intrinsic value, like DCF?
Intrinsic valuation methods like discounted cash flow, DCF, are also incredibly uncertain here. Why? Because KULR is pre-profitability, their strategy is highly unpredictable now with the Bitcoin focus, and the whole situation is just highly volatile. To do a DCF, you'd have to use a very, very high discount rate to account for that risk, maybe in the 15 to 40% range, or even higher. So the final valuation, however you try to calculate it, ends up being this kind of fuzzy mix of two highly speculative things: a bet on unproven deep tech commercialization and a leveraged bet on crypto.
It truly sounds like a company being pulled in two very different directions, making any traditional valuation incredibly tricky. What is management actually saying about this strategy? Are they acknowledging the risks? Are they fully committed?
Oh, management's comments really double down on this strategic pivot. They're framing the Bitcoin treasury not just as some side investment, but as like the central pillar of their whole financial strategy going forward. The CEO, Michael Moe, he explicitly stated, KULR is in its strongest financial position to accelerate its growth and continue its innovations. Our Bitcoin holdings provide a solid financial balance sheet that enables us to invest confidently.
So positioning Bitcoin as the foundation for future investment.
Exactly. And the CFO, Sean Cantor, echoed this. He specifically separated continued investment for KULR's long-term growth and scalability, that's the core tech, from executing on our Bitcoin treasury strategy. As if they are two distinct but equally important pillars. They are clearly all in on this dual path.
Okay, so management is fully committed. They're painting a picture of strength based on Bitcoin. But what's the broader market's take? Are investors buying into this vision, or are they skeptical?
Well, KULR is very much what you'd call a battleground stock. The market is deeply divided. On one hand, you do have a few financial analysts covering KULR, and their consensus ratings are overwhelmingly positive, strong buy or buy recommendations across the board. And their price targets are incredibly bullish. We're talking ranges from maybe $10.80 up to almost $49 per share. Compare that to recent prices, around $5 to $6.50. That suggests analysts see potential upside of several 100%.
Huge upside potential, according to analysts. But what's the other side of the battle?
The other side is significant skepticism, primarily reflected in the short interest. Short interest is exceptionally high, somewhere between 19% and 22% of the publicly available shares, the float. And that number has been going up.
20% short interest. That's substantial.
It's very high. It means a big chunk of the market is actively betting the price will fall. This creates that classic battleground stock scenario and fuels significant volatility day to day.
Any other signals from the market? Technicals?
Ownership? Yeah, looking at the technicals, the stock price, as of mid-August 2025, was trading below both its 50-day and 200-day moving averages. Those are key trend indicators. And importantly, the 50-day average crossed below the 200-day back in June. Technical analysts call that a death cross, and it's generally considered a long-term bearish signal. Ownership-wise, institutional ownership is relatively low, maybe 8% to 21%, and mostly passive index funds due to that Russell inclusion. However, there has been a noticeable uptick in interest from hedge funds lately, which suggests growing speculative interest, perhaps playing the volatility.
And who owns most of the stock?
The vast majority, around 84% according to sources, of the shares are held by retail investors. That high retail ownership often contributes to higher volatility as well. And one more thing, recent insider selling activity has outweighed insider buying.
Okay, so a very mixed picture. Analyst optimism, huge short interest, bearish technicals, mostly retail ownership. Definitely a battleground. So, wrapping this up, what does this all mean for you, the listener? This has been a truly fascinating deep dive into KULR Technology Group. What a ride. Innovation, huge strategic pivots, market battles. It really makes you think about the pressures on companies trying to operate right at the cutting edge, both technologically and, well, financially these days.
It really does. KULR's Q2 2025 was undeniably a landmark quarter. It feels like a strategic turning point for them. The strong revenue growth proves there's real demand for their cutting-edge tech. People want it. But those widening operational losses hammer home the reality that this is still very much a high-investment, pre-profit company in its core business. And management's answer to funding that gap wasn't traditional venture capital or debt. It was this audacious, almost radical move to anchor the entire company treasury to volatile Bitcoin.
Yeah, the result is this quarter where the fantastic headline profit came straight from financial engineering, the Bitcoin mark-to-market gain, plus the reverse split, not from operational success in the core business. So for anyone looking at KULR now, it's really become this dual narrative, hasn't it? It's a venture stage bet on really cool battery and thermal tech, absolutely, but it's funded and leveraged by a highly speculative bet on Bitcoin's future price.
Two very different kinds of bets rolled into one single company stock.
Which is quite unique.
Very unique, and this deep dive absolutely shows how vital it is for everyone to look beyond the headlines, dig into the financial engineering, understand the accounting nuances, and try to grasp these potentially conflicting narratives happening within one company. It really leaves you, the listener, with a really interesting question to ponder, I think.
Definitely. In this world where we see both these incredible deep tech advances happening, like KULR's core work, and at the same time, these super volatile digital assets like Bitcoin grabbing all the headlines. How do you, as individuals trying to stay informed and make sense of it all, how do you weigh that proven innovation track record, that NASA validation, against the undeniable allure, but also the undeniable risk of these big speculative financial bets? What truly stands out most to you about this unique and, let's face it, high-stakes dual strategy that KULR is pursuing right now? Something to think about.
Absolutely. And just a reminder for everyone listening, this deep dive is purely for informational purposes. It does not constitute financial, investment, legal, or tax advice. Please always do your own thorough research before making any decisions based on anything you hear.
Yep, all information should be independently verified by you.